they're disintermediating use of the dollar everywhere they can. SWIFT is out. It actually kills the Eurodollar system. It completely disenfranchises the dollar as the currency that denominates oil. It's the death of the petrodollar. Along east-west lines, there's almost like an iron financial curtain going up. We're in a multipolar, multi-currency world. It means we're going back to World War I, previous World War I, where everyone had their own currency. It's about trust. If there's no trust, then there has to be something that doesn't need trust, and that's gold in your hand. We're in a world war right now, but it's not kinetic. We're rationing, we're restricting access to supplies, we're repatriating gold. Other nations are doing the same thing. These are all things you do when you're either preparing for war or in war. Now, we're in an economic war. I think the risk of real war comes up from the actual black swan that no one's thinking about.
This is The Real Story with Michelle Makori.
A crack in the global monetary system just widened. The BRICS, Brazil, Russia, India, China, and South Africa, have taken another step in building an alternative financial architecture and bypassing the dollar. A pilot program has been launched for a new BRICS settlement currency known as the unit. So here's what it is. The unit is a wholesale settlement instrument. It's structured as a basket made up of 60% BRICS currencies, including the Chinese yuan, Russian ruble, Indian rupee, Brazilian real, and South African rand, and 40% physical gold. It's designed for cross-border trade settlement between nations and large institutions operating outside traditional Western banking rails. And this is a real attempt by the BRICS bloc to create a parallel settlement layer that reduces dependence on the dollar-based system. Now, the unit is still experimental. It's still in the early phase, but it does show that the BRICS are no longer just talking about alternatives, they are beginning to build them. And this also represents a real shift in direction, a shift away from a system built on promises and sovereign debt, and towards a system anchored in collateral, with gold returning as a reference point for value and trust. Now, some have called this a direct strike against the dollar and Western dominance, and they say that the countdown towards the dollar's demise has just accelerated. Others are dismissing this development as a paper tiger. So, does the truth sit somewhere in between, or is the real significance being misunderstood entirely? What is the unit actually trying to achieve? What does it mean for the dollar? Is Washington paying attention? And what does this mean for gold and gold prices? What does this experiment tell us about where the global monetary system is heading? Well, to help us break this down, we are joined by Vince Lanci. Vince is a seasoned finance professional whose voice has become a trusted compass for traders and investors alike. Vince wears many hats. He is the publisher of GoldFix, a widely read Substack focused on market insights. He's a portfolio manager with decades of hands-on experience in commodities and derivatives. He's also an adjunct professor of finance, including teaching MBA courses at the University of Connecticut. And with more than 30 years in the markets, Vince has navigated everything from energy and metals trading to volatility strategies and options analysis. And he is also known as VBL's Ghost, a story which we will get into later. Vince, very good to have you with us. Thank you for joining us.
Oh, Michelle, thank you for having me. It's been a long time coming, and I'm very happy to be here. That was a very suspiciously pleasant introduction. Thank you.
Suspiciously pleasant. Well, I'm sure we're going to cover a lot of interesting topics, including, as I say, your interesting pseudonym. But before we get into that, I want to start off with helping our viewers understand what is happening right here. There's a lot of significance into this development and what this could mean for the global financial system. But before we go there, I want to start with the big picture and some clarity for the viewers.
Sure.
What exactly is the unit and what has actually been launched here?
Okay. I think your description is very good. The unit is or was a BRICS concept that proposes a 40% gold-backed payment settlement currency. Now, it shouldn't be called a currency, but we're going to call it a currency. And first emerged publicly when Pepe Escobar reported on it back in 2024. Now, it's a proposal that would essentially allow BRICS nations to conduct trade, as you alluded to, while having a gold and BRICS currency-backed payment basket to settle imbalances. Now, many were, well, let's put it this way. Your introduction, I think, frames it well, because for nearly 2 decades, global payments have relied almost entirely on debt-backed sovereign money and correspondent banking trust, which is exactly what you mentioned there, to conduct trade. That architecture is now fracturing. We have more news about that as well today, along east-west lines. There's almost like an iron financial curtain going up. Matt Riley said that phrase. I want to give him credit for that. It's a great phrase. Experiments are emerging to rebuild the trust at the asset level rather than the sovereign balance sheet level. Now, the unit is going to be categorized as an experiment, but I'm here to tell you, and I think you already know, that it's far beyond an experiment. It represents one of the clearest formal attempts to precisely do that: engineer a basket-backed, collateral-anchored settlement instrument intended specifically for wholesale cross-border trade in a multipolar financial world. One final thing: the concept of the unit was designed in 1944. They're not reinventing the wheel here. This was something that they were going to do at Bretton Woods, and they turned it down in favor of keeping the dollar strong. But it's coming back now.
Right. I believe it was Keynes who wanted to have a collateral-backed unit known as the Bancor back then, as a historical reference point. We'll get to the history. Let's focus, because it is relevant. It is relevant in the way that we're moving. And of course, a theme we always cover in this show is that ultimately history does repeat itself, right? In terms of how global currencies have come and gone, how gold always seems to work its way back into the global financial system one way or another. And of course, we do want to focus on that. But I want to get a little bit more detail, a little bit more granular on the structure quickly. So as we said, it's 60% BRICS currencies, 40% physical gold. That basket made up of Chinese yuan, Russian ruble, Indian rupees, Brazilian real, and the South African rand. And they all get equal weighting here. The idea was to keep it politically neutral, if you will, inside the BRICS. And it does avoid China dominating the basket by making the yuan overweight. It does address the issue of preventing internal BRICS political fights over the currency hierarchy. That's the currency basket. What I'm interested in is the gold aspect here, because there are a lot of misconceptions here. How does the gold aspect work? Is it redeemable? Is it convertible? Where do they collectively pool this gold? Break down that role, the role of gold for us here.
Okay, as you said, just to get it out of the way, the 5 BRICS members put 12% in. There's your 60%. And the 40% is gold. Now, not to regress, not to go back too far, but anyone who's familiar with the fact that the BRICS have been accumulating gold, they've been doing that with a plan in mind, and that is to create a network of vaults outside of the nations like China. So if all the BRICS nations have vaults in separate areas, those vaults serve as a network, and the gold will be stored at all those vaults. So you have a diversification geographically, avoiding the risk of having all of your gold in the US. That's one of the ideas they're doing there. And keeping it away from China if for some reason they decide to get greedy. Now, the unit itself, the gold in the unit itself, is not redeemable, which follows along with what Keynes wanted to do. And the point of it is the gold is not something that you can cash in. And when you cash something in, then you're going to need custodial banks. You're going to need centralization. Okay, when you cash in the commodity, the idea is that in easy to understand terms, everyone has their gold in one vault, and the gold is in each locker for each country. And at the end of the month, this is not going to be debt-based trade. This is not going to be bonds or debt. It's going to be, I buy wheat from you, you buy oil from me, and at the end of the month, we net it out, and I owe you $600 million. And the unit, which is actually blockchain product, has inside of it 40% gold and our currencies. And you give me a unit. The gold doesn't move, but it's all in the same place. And they're going to settle their debts like a 30-day credit card. And it will work. I mean, I could say to you, it will work simply because they're not using it for everyday nonsense purchases. They're using it for existential purchases. I buy wheat from you. You're not going to not pay me the wheat, or we will be at war. You buy oil from me. And so the BRICS is just a way to settle up at the end of every month. And it is a valid basket. It's like the SDR for the IMF, but it's better.
Okay. Are they paying in the unit then? Like, what are they actually paying in? Because you mentioned they're still, according to you, pricing things in dollars.
Right.
At least in the example that you gave. So explain that.
Yeah, it's funny. If you go to their website and they actually say what we have been saying, or what people like yourself and I have been saying, and that is eventually, and Andy as well, eventually we're going to start pricing things in ounces. And the idea is we all price in dollars. And because we price in dollars, we look at gold in dollars. But the reality of it is if gold's a commodity and gold is being hoarded or accumulated or repurposed for money, then all the other commodities in the world will be judged by their frequency of occurrence in nature. And so, as a result of that, the unit is a unit. It's a unit. How many units do I owe you? And so they're actually going to be talking about, like, if you go to the website, here's what I was trying to say. The 60% currencies aren't priced in dollars. They're priced in gold. So it's 40% gold, and it's worth whatever gold is worth. And the currencies are measured in how much gold they can buy. And that's the key to avoiding the dollar denomination risk.
And that's the whole idea here, because the first talk of this came about, I believe, in late 2023 around the BRICS summit in Johannesburg. You mentioned, Andy. I will say that the first person to put this on my radar very, very early on was Andy Schechtman. And his analysis, along with others, including yourself, framed this as part of a global pushback against what many saw as the excessive weaponization of the dollar under the Biden administration, especially when Russia was removed from the SWIFT system and then sanctioned due to the war in Ukraine. Now, I recall at the time Andy saying that this was a pivotal moment, and it highlighted that we will start to see gold playing a bigger role in the global financial system as a neutral reserve asset as countries look to de-dollarize. So from the beginning, Vince, the conversation around the BRICS unit was tied to countries looking for settlement channels that could not be frozen, that could not be sanctioned, that could not be politicized. And I know there's a development on that front regarding Russia, which we will get into. But before we get into how significant this pilot launch could be, what was the problem, if you were to encapsulate it, that the unit is trying to solve for the BRICS countries, or for anyone who might eventually use it? And how does that even, and how you can't even link it to the recent development that we've seen with Russia?
Well, it's actually very, I mean, you've already touched on it. It's trust. So if I'm a country and I have my money in the SWIFT system, which is really just a plumbing system that everybody puts their money into so they can transact with each other. People talk about supply chains, and supply chains are handing off the raw material all the way up the line until the finished good. Well, at every point in the supply chain, there's a payment chain. And the payment chain is closed out with dollars, and they talk about it in dollars. The payment chain is owned by the US. The payment chain is SWIFT. And so if your money's in the plumbing system and they decide to confiscate your money, which is what basically happened with Russia after the Ukraine invasion, which is potentially not legal to do, even if it is, it's probably not right to do. You have a situation where I'm a smaller country and I look at what happened to Russia and I say, well, Russia's bigger than us. Russia's got nuclear weapons and they stole their money. That's how they're going to look at it. And so I say to myself, I would like to do something different. That's what they're doing. Primarily, there are several things they're doing. The first one is we want to address the concern about the abuse of the weaponization of the dollar and the SWIFT system, which ends with confiscation of wealth. It goes from if you're geopolitically looking at this, it's tariffs become sanctions, sanctions become confiscation, confiscation becomes war. So if sanctions are put on you, eventually the U.S., if it can, is going to actually take your wealth if it can get away with it. So that's the first and main issue. Without going into all the other ancillary issues, just I'd say the second issue is, and this is big, and this is why the vaults matter. A lot of these countries, and anybody out here who's long gold, who has been long gold as long as I have, and silver will understand when I say this. For years, the price of gold and silver have been suppressed, repressed, suppressed. I don't know what the difference in the word is, but it's all been tied to the strength of the dollar. Now, if you're an emerging market and most of your money is made in pulling commodities out of the ground and selling them, well, your currency is tied to gold because gold and commodities and oil come out of the ground and your currency gets crushed because the dollar is so strong. What this does is it frees up the price of gold to not be encumbered by dollar power. And in doing that, it allows a country like Ghana in Africa. What do they have? Do they have anything? Well, they don't have oil. They have to buy their diesel. They have oil, but they have a lot of gold. Well, what can they use to build their country? Well, they have to use treasuries because that's how it works. But now with gold in the BRICS system, they can monetize their gold and use it as collateral without having to sell it. And that's the key. There's going to be a lot more development in the countries that have gold because it's willing to be used as collateral. So there's two big things there, I think.
And we'll go back to the idea of collateral, but I think it's important that I just clarify a misconception that some people may have. And that is when we hear BRICS currency, this is not a BRICS version of the euro. This is not a retail currency. This is not something that citizens will be holding in their bank accounts. It's not legal tender. It's, as we discussed, not redeemable for gold. It is not a BRICS version of the euro. That's a big distinction because people hear this and it sort of gets them a little bit, just wanted to clear that up. So it's a wholesale settlement instrument. It's designed for cross-border flows between institutions and states. Understanding that distinction, I think, helps frame what comes next year. What will this be effectively replacing then? If it were to take off?
No. This is a good point. You alluded to the fact that it's always history repeating itself. Well, the concept of the unit and the monthly settlement is a throwback to, and I've used this word for 3 years because it's happened, mercantilism. Under the mercantilist rule back in Middle Ages, what you had two forms of money. You had the money that nations used to settle their debts with each other, which was gold. France buys something from Spain. The king says, fine, I'll send you some gold over. And they settle the deal, right? But then the money you have in the country that's spent by the people, that's called scrip. It's called, it's bits of paper, right? And they say, well, today the paper money is going to be worth 5 sovereigns or 2 sovereigns. And they kind of cry up and cry down the money, which, by the way, that's where open outcry comes from. Now, so you have these two forms of money within the nation. And it's the money that you and I spend as citizens, and it's the money that nations settle their debts with across borders. And it becomes the unit, or what comprises the unit, becomes a way to settle international debts, not domestic debts. It's not literally a currency the way people are thinking about it. It is a means of settling international transactions expeditiously and quietly without having to go back to those Stone Age days where I'm sending a ship with the gold over to you now. It's there. The blockchain verifies it to the extent that they trust the blockchain, and that's it. Now, you are talking about where it goes from here, and that's the interesting, paranoid, conspiratorial truth that's about to come out. It's not the unit itself that causes the problem. The unit that the plumbing it goes into will be sovereign plumbing. So I call you, you call me, we exchange. I'm the king of France, you're the king of Spain, and we do that. But it's also a vehicle for central bank digital currencies. The plumbing can hold central bank digital currencies. So 40% of the money in the unit is gold, and the other 60% is central bank digital currency. The central bank digital currencies that are going to become liquid from transacting back and forth continuously are going to become the money that nations use locally. So that'll be the paper that they hand out to people. So
The
60%.
paper.
Yeah, exactly.
Okay.
The virtual paper. It's not even real paper anymore, but that's
Mm-hmm.
it. I mean, that's exactly what's going on. And you're seeing nations ring fence their people in, which is what mercantilism was about. You ring fence the money in while you transact internationally. The money can't leave except our money. And that's what happens. And so every country wants to brand their tax base with their money to make sure no one else gets them. They want to make sure that the dollar isn't there anymore, and that's what's going to happen.
Well, so just to pull back here, obviously it's not the King of France or the King of Spain. I know you're
Right.
making a historical reference there, but you're seeing this designed for central banks, commercial banks, state-owned enterprises, commodity traders. Like who
Yeah.
realistically be the first adopter of something like this?
Well, at the unit level, which is the basket, that's going to be sovereign debts. It's going to be used for very simple, very robust, very frequent trades. And so, for example, uh, China wants to buy oil from Russia. Now, in the past, they would transact through SWIFT using dollars. Uh, Now, well, if this were to go down, they're going to be transacting through BRICS Clear or MBridge or whatever they actually name the platform, and they're going to be using units. Now, the reason it completely disenfranchises the dollar as the currency that denominates oil. It's the death of the petrodollar.
Mm-hmm.
Slow, but that's exactly what it is. Now, you refer to businesses, and that's interesting. I think there are choices or there are multiple paths that we don't know about yet. One of them was just launched. Without getting too far into it, Europe has its own plumbing, right? India has its own plumbing, but they never connect. They always connect through New York, Swift.
Mm-hmm.
Well, they just announced 2 weeks ago that, and this is about your commercial interest, that India is going to connect directly to France, to the not France, to Euro. So India is going to connect its plumbing right to the Euro plumbing, not using Swift at all. And this is not rocket science for them. They already have this done. It's basically a plug and an outlet. That's how it works. When this is done, to make it human, you and I, you're in Europe and I'm in India, and you want to pay me. If you want to pay me in rupees, it goes into your bank. You say ACH debit or you say wire. It goes to Swift, and then it goes to me.
Mm-hmm.
So that's two transactions. This way, you hit sell 100 euros, convert them to rupees, it goes right to me. Swift is out. It actually kills the euro dollar system, which is, I think Europe benefits from, but at the same time, it's also a handicap. I don't want to go down the rabbit hole except to say that they're disintermediating use of the dollar everywhere they can. And
Mm-hmm.
and that's where the commercial side comes in. Are they going to use units at the commercial side? I don't know, but they're going to use direct lookalike baskets. They'll create an index or something like that, like Platts for oil. That's what I think is going to happen.
So this is just the BRICS unit currency, just one example of the larger trend to de-dollarize, to move away from the SWIFT system. I mean, this particular BRICS currency unit, I believe it was just a small enclosed pilot. When
Yep.
we say launched, it was just very controlled. It's not really officially launched, but
Mhm.
you're saying that the trend here, this is symbolic of the trend that we're seeing enacted through other avenues as well.
Yes.
So what is the implication then for the dollar here? How
Well,
significant is this really for SWIFT and for the dollar?
well, the well, first of all, just to people that are going to say the unit is not a big deal, it's a massive deal because it was started and financed by an organization from the Soviet era, which has 5 countries as members: Hungary, Russia, Mongolia, which is basically China, Cuba, which we don't really care much about, but they exist, and Bulgaria. Those 5 countries, because of their importance in the BRICS financial plumbing, they have a lot of experience in this. They're going to dictate the future. So while it is a small 100 coin test, we're not talking about a currency here. We are talking about a currency eventually. We're talking about a basket. Do you accept it? I accept it. Do you accept it? So we make sure it works. Now, starting next year, they're going to mint about 1,000 of these. What they're really testing is the plumbing attached to it, the blockchain. Cardano is the one that they're using right now. But there could be other products. But I want to emphasize how important this is. The technology doesn't matter. The concept works. They're using it. And even JP Morgan in July wrote a 10-page report on the BRICS progress. And they said, I'm basically quoting, they basically said, there's no other plan out there that's as well thought out of and well organized. And this is the biggest global threat to de-dollarization at the sovereign level yet. So it's the real deal. Now, your question, if I can remember it, I'm sorry about that. Your question is, what does it mean? It means more de-dollarization. It means, practically speaking, it means the dollar is going to weaken against every BRICS country even more than it has. The dollar is going to weaken against gold. The dollar is going to probably strengthen against the euro. But in general, it means there's going to be too many dollars floating around that are orphaned, that aren't needed for anything. And so the Fed's going to have to suck those dollars up. It means we're in a multipolar, multi-currency world. It means we're going back to World War I, previous World War I, where everyone had their own currency. Everyone would trade gold over the borders. But now you don't have to trade the gold anymore. We are taking a step back out of globalism into a more separate but equal situation. And the dollar is just not important anymore for that reason. I mean, it's going to lose status over time.
Over time, and we'll get into timeline and projections in a minute here, Vince, but President Trump has been very vocal about defending dollar dominance. He's called out the BRICS previously for trying to take out the dollar. We'll get to previous comments, but have we heard anything specifically about this development, about this pilot launch? Have we heard anything from Washington, the Trump administration, or otherwise about this latest development?
I have been listening very closely to this, for this, and there's been nothing out of Washington. They probably have bigger fish to fry domestically. But I do know that they're looking at it because Scott Bessent is talking about gold a little bit more. And we discussed this off air prior, that when the BRICS and the BIS, the Western banks, split on their development of this plumbing system, the BIS started making their own. So we are in the process of, there's not words coming out right now, but what is happening right now is we're developing our own platform to be able to connect to them. So we are going to have to, look, eventually in the future, if you want to, assuming that there's no war and it works, if you want to trade with any of these countries on that side of the Iron Curtain, the Iron Financial Curtain, you're going to need gold. They're not going to take what you want to give them. You're going to need gold. You're going to need dollars to buy American goods, and you're going to need gold and rupees and rubles to buy their goods. And I think it's actually going to go down. So there is no new news, but there is action behind the scenes. I don't think they're just watching this happen.
This has been addressed, though, by President Trump before, because this would be, as you say, a big hit against the dollar. He has said that the BRICS are trying to destroy the dollar. He said that losing the reserve status, which sounds like this would significantly erode, if not eliminate entirely, is like losing a very big war. I want to play these remarks from the president. This was in July of this year, and then get your thoughts on the other side. Let's play that.
BRICS was set up to degenerate our dollar and take our dollar as the standard, take it off as the standard. And that's okay if they want to play that game, but I can play that game too. So anybody that's in BRICS is getting a 10% charge. But what they're trying to do is destroy the dollar so that another country can take over and be the standard. And we're not going to lose the standard at any time. And if we lost the world standard dollar, that would be like losing a war, a major world war. We would not be the same country any longer. We're not going to let that happen. The dollar, you ever hear the expression, dollar is king? The dollar is king. We're going to keep it that way, okay?
Yeah.
Well, it doesn't sound as though the Trump administration, at least, is going to give up without a fight. Now, granted, they have tried to weaken the dollar as part of the Trump administration's agenda to onshore manufacturing and to be more sovereign. The president mentioned sanctioning the BRICS at the time. Arguably, that's what provoked the situation in the first place.
Right.
So I don't think that would work. But Vince, in terms of a reaction, yes, maybe they're looking at developing something similar, but even in that scenario, it sounds like it's still very detrimental to the dollar. So what do you expect from the US, the Trump administration, perhaps if it's further down the line, another administration?
That's while you were playing that, before I answer that, while you were playing that, just for some perspective, he sounded like, and I'm not being negative, but I want to be clear about this. He sounded like when Nixon said they're attacking the dollar. In 1971, the evil speculators are attacking the dollar, and we're going to protect it by disconnecting it from gold. And that's what he was saying here. The evil BRICS are attacking the dollar, and we're going to protect the dollar, probably by connecting it to gold somehow. I'm not calling for a gold standard, but we're going to have our own basket. But to answer your question directly, it's hard to tell when Trump is addressing something to address it or addressing something to let people know tactically that he's aware of it. Don't mess with him. He'll get back to it later. So it's kind of like, I'm going to put a pin in this right now. But to your point, he was very adamant when he said that. He addressed it and then he let it go. And I think you said it was July, right?
Mm-hmm.
Yeah, that
July.
was right. So it was May 16th that the BRICS finished their summit. So he might have been trying to address and tamp down any talk or enthusiasm that either A, we're not doing anything about it, B, we're not going to do anything about it. I mean, we can't do anything about it, or C, we're not aware of it. So I think he was trying to show competence there. At the same time, the BIS launched that's the Bank of International Settlements. They launched their Agora platform, and that wasn't something talked about much, but that platform is a replication of the platform that the unit's going to go into. And the unit will be able to go into that. Agora meaning everything. So I think, to your point, what is the plan for Trump with this? I think it's prepare for the worst and hope for the best. So would he raise sanctions? Yes, it's a negotiation right now. So if China were to do something less incremental and more aggressively over the top, the U.S. would say, "Look, I'm not afraid to do this, and we'll pull you out of SWIFT overnight." But if it happens incrementally and slowly, as China has been doing, I think Trump can focus more on his other problems, other issues that he's dealing with, like midterms and what have you. And then if China plays its cards right, they're trying to do this as a slowly at first and then all at once thing. But Trump is saying, "I'm not forgetting." I know that. Look, I walked away from that as a BRICS person saying, okay, he hasn't forgotten about us. We got to be careful. That's what I walked away from. But look, Michelle, 5 years ago, no nation on earth would even talk of de-dollarizing, let alone sell their treasuries in this fashion. No nation on earth would be speaking publicly against us. You have an alignment of more than half the economic world saying we're not going to use dollars anymore. We're not going to buy new dollars. And so, 10 years ago, they would probably risk about being bombed. There's a war in your backyard if that happens. I mean, it's a little cynical to say that, but we were the policemen of the world. And you'll notice that while they're de-dollarizing, we're pulling back on our police activities. We're letting things happen a little bit more organically. We're paying for them, but we're not in there. You don't see a lot of military exposure. So I think that it's jawboning by Trump. We will do what has to be done if it needs to be done. But at the risk of sounding unpatriotic, I don't think we can avoid what's happening. And to your point, finally to your point and his point, after a world war, every 100 years or so after a major conflict, the global currency changes. Mm-hmm. Now, he's saying that they want to replace it with a new global currency. They do not. Now, I'm not naive. They do not. They want to replace it with multipolarity. They want to replace it with a basket of currencies. Now, I believe China ultimately wants to replace the dollar as a global currency. I don't believe they want to do that now. I think they want to have two currencies in the world: massive regional currency in China and a massive regional currency here. And here's my point about that. That BRICS basket, the unit, it's 40% gold. Well, which nation has the most gold out of the BRICS? China, right? So if China has more gold than every other nation and the basket is 40%, well, then China has the most strong currency. In other words, if gold is what matters.
Right. I want to get back to Trump and Trump's reaction, but seeing as we've gone into China, let's drill more into that, because China has in place its own settlement architecture that's also been functioning. They've got the digital yuan. They have Enbridge, which is already being used for cross-border CBDC transactions. Places like Hong Kong, the United Arab Emirates, Thailand. China has been, I won't even say experimenting. They've actually been working with a gold-linked settlement for trade with Russia. They're ahead of the game here.
Yes.
So it kind of takes away a little bit from China if they have to be part of the unit. Or are you saying that the unit is an intermediate step before China takes its bigger role and takes the first prize, which is what it wants?
Yeah.
Like, how does the unit fit in with China's agenda of the digital yuan and its gold settlement layer that's already very much being acted out?
That's a good point. Let's say that every currency is equal, and they are equal. And let's say that everyone has the same amount of gold. Let's pretend it's not about gold. China has the manufacturing base. China is making loans in its own currency to each one of these countries. So ultimately, China will replace it just because everyone has it. So the Saudi Arabians, they're buying oil in yuan now, as you alluded to, right? Yuan and gold. Well, now they have the yuan, and now they're saying, what am I going to do with it? And China's like, well, you can buy your goods from us. And so this strengthens China's economy. They're replacing the U.S. consumption by seeding everyone with their money. If everyone has the money, then they're going to spend it on stuff that we make. And down the road, if they do it right, they will be the dominant economy because they're the manufacturing economy. Now, I'm not saying that's necessarily going to happen, but I am saying China and the BRICS, to your point about China being or not being the strongest power, China must not assert itself too strongly while this is going on, because the BRICS are only as strong as their weakest member. If the U.S. peels a member off, the BRICS is broken, kind of like what Europe would be. The BRICS are not going to be as strong as China until they formally ratify, and they're not formal. They're a voluntary organization. So we're working on destabilizing them. I'm sure of that. But if we don't, down the road, you're going to have 5 nations united under a Chinese umbrella using their manufacturing and their goal for trade. Like you said, China and Russia are already doing it. They've been doing it since 2017.
So this sort of just lays the groundwork for that global monetary split where China hopes to eventually dominate, if I'm understanding that correctly. Vince, let's talk about those words from President Trump. This is like losing a war. And it sounds as though you're ruling out kinetic war, kinetic conflict, and that they're going to look for other ways to try and handle this. Do you think that an actual kinetic war is a potential possibility here in order to tackle this issue?
Yes. So, but specifically, I think if you would look at when President Trump said, this is like a war, he's right. We're in a world war right now, but it's not kinetic. We're rationing, we're restricting access to supplies, we're repatriating gold. Other nations are doing the same thing. These are all things you do when you're either preparing for war or in war. Now, we're in an economic war. I believe so far that's what we are in. Now, the reason I think it could go kinetic is because if you were to look at the U.S. and China as a married couple divorcing, they both know that they could destroy everything if they don't do it right, if they're not prudent about it. So I think in kind of a prisoner's dilemma setup sort of way, that China and the U.S. are moving towards to go their separate ways, and every so often there's going to be squabbles. about this or about that, and everyone has to smack everyone back in line, so to speak. Uh, I think the risk of real war comes up from the actual black swan that no one's thinking about, and the black swan by definition is something that you haven't thought about, and so the black swan would be a small nation that gets caught in the crossfire between trade sanctions between the U.S. and China. If they escalate, and that nation becomes desperate, and then you have another skirmish war. Ukraine is a war. Israel Gaza is a war. There could be another war. Now, I think the kinetic there is a black and white kinetic thing that we have to look at, and that is Taiwan. I have friends. I have relationships in Taiwan and the mainland and Hong Kong. And if there is one thing China will not negotiate on, that's Taiwan. And so as those talks increase, so does your fear of kinetic war. And that'll just be the icing on the cake for everything else going on. So I think it could happen. Do I think it'll happen tomorrow? No, but other people do think it's going to happen very soon. I don't agree. I hope not.
I certainly hope not as well. And yeah, we have had guests on this show that think it could happen as soon as 2027. But let's focus on the financial side here, because look, whether it's China or the unit, we do have gold as a central aspect here. If models like the unit keep moving forward, this does start to put gold back into the center as collateral. It shifts gold, to use your language, from store of value to monetary plumbing, right? Now, something like the unit treats gold more like plumbing, more like a piece of infrastructure. So what does this mean for gold going forward? I mean, we know we have central banks already buying gold at record levels. I'm assuming this is part of the agenda here. What does it mean for gold?
We've been discussing the institutional level. Nations are buying gold. Central banks are buying gold because they want to use it for this sovereign trade. Is that all they need? No. See, every BRICS nation, one way or another, is encouraging their people at the individual level to buy gold. China liberalized ownership of gold. They connected savings accounts to gold accounts. So you and I, we have a checking account connected to, let's say, a stock account, but we can't buy gold directly through our checking account. You can in China. Russia is no longer exporting its own gold production. It's selling it to its own citizens. They are encouraging to buy gold. They're encouraging their citizens to buy gold. China has done it, continues to do it. Russia has done it and is doing it, escalating it now. The reason I bring this up so pointedly is because it's happening on both sides of the world. In the U.S., it started a couple of years ago. You could buy gold at Costco. And then it became gold is now, look, the most important thing right now is the recent news is Morgan Stanley 60-40 portfolio is 60-20-20. Goldman Sachs said the bond market is dead, buy gold, and they put out another note on that today. Domestically, the U.S. is also encouraging, let's put it this way, not discouraging its people to own gold. It just wants us to all own it through their ETF. And that's what's going to happen with most normal neo-Keynesian types. So what I'm saying is that we can now readily see the central bank sovereign demand, but there is a grassroots thing going on now. And when you launch stable coins, right, which the U.S. is a proponent of for multiple reasons, and then you hear that Tether, which is one of the more important stable coins, is now a bigger buyer of gold than a central bank, than most central banks in the last quarter, you have to ask yourself, what's going to happen? And what's going to happen is there are going to be products released for gold to encourage Americans to buy gold. And that'll either be a gold bond, a gold stable coin, a gold IRA. In fact, they're changing the rules for IRAs in 2026, are they not?
Yeah, they are, actually. You're quite right on that, 100% correct.
So now I guess we're getting into what does it mean to the price of gold?
Well, I will point out, as you were saying, that you've got nations encouraging individuals to own gold. Also this week we had gold and silver being allowed for the first time in India's pension system. They've included gold and silver ETFs, exchange-traded funds, as permitted investments for the first time in India. So this, just to further substantiate the point that you were
Yeah.
saying, that these countries are encouraging ownership of gold on the individual level. But why are they doing that? Why
Well,
do they want individuals to own gold?
yeah. Well,
I mean,
because
previously countries have confiscated gold to make sure that the central bank has it.
Mhm.
Why do they want the individuals to have it?
No, it's uh, uh, there is a nexus point of to answer that question. And that's a really good question. What's the purpose? In 2016, an IMF representative asked PBOC, People's Bank of China central banker, how much gold does China really own? And he said China owns gold through its people. Now, you can take that to mean that China will confiscate it if they ever need it, and you should take it to mean that. But what it means is that the world wants to, nation by nation, wants to keep the gold and silver that they have. To your point about India, China is encouraging its people to buy gold. Russia is encouraging its people to buy gold. The U.S. is passively doing that. But Indians already have gold. Indians already have silver. To your point, they want it to stay in the country so you can put it in your pension. You can use it as a loan to get money now. You don't have to sell it anymore. Keep all the gold here. So when you see what India is doing, what Russia's doing, what China's doing, what the U.S. will do, and even what Italy's doing, asking people to bring their gold forward to go into the system, it seems like every country is not confiscating their gold, but they're making sure they keep what they have in their country if they ever need to monetize it, if they ever need to tax it, if they ever need to confiscate it. So I think the answer, the conclusion is, I don't know what they're doing with the gold, but they all don't think they have enough of it, and they want to keep what they have. So I think gold is going to be a lot bigger on the monetary stage than people give it credit for.
That does seem to be the trend, definitely. You mentioned Italy. I believe that Italy has also asked the ECB to segregate its gold holdings, that Italy wants to take, well, not take it back, but say this is our gold. It's not part of the European pool there. I believe that's a development that we've seen. And just to clarify for our viewers who may not be familiar with Tether, we have covered this in the past, but Tether, one of the world's biggest issuers of stable coins. Stable coins are now regulated. You need to buy US treasuries in order to issue a stable coin. It's being seen as a way to counter the de-dollarization trend by creating a new market for stable coins. And here you have the world's biggest issuer of stable coins, not only buying gold, but also investing in the gold ecosystem. We had Rob McEwen, the CEO of McEwen Inc., saying that they've had conversations with Tether about buying, an interest in the gold ecosystem. We know that Tether has been at these mining conferences. It's clearly purchasing gold, working its way into various, as I say, parts of the ecosystem, and also buying Bitcoin at the same time.
Mm-hmm.
But let's bring it back to the price of gold, because ultimately, that's what a lot of our viewers want to know. What does this mean for the price of gold in terms of how high can it go, and what is a projected timeline that you may have?
As a trader, I don't give targets or timelines, and that's because I never know until I know. But I can give you two reference points that I'm using. One reference point is a reference point because I do believe the U.S. citizens are going to be encouraged to buy gold one way or another, passively or overtly. And I do believe we do need to do it because every other country is doing it. I think Jeffries, Chris Wood, partner at Jeffries for years, they did some math and they said that if gold were to reach X percentage of capital in a household, the price of gold to equate what it was in when it was $800 in 1980, would have to be $6,500 at least, possibly as high as 12,000. So let's call it 6,500 is a place where gold should be when U.S. buying comes in domestically. And we're seeing that happen right now with the ETF flows. If Tether launches their product, I think you're gonna have more buying because the younger generation will use a stable coin concept. it's a new wrapping paper like .com, and they'll use that. I think the other price mechanism that I think can be used, and I'll give this to you because it just came out. Goldman Sachs just put out a piece, and you can just tell that they're just getting ready to raise their target price. They said they've done the math, and that every 1/100th of 1 basis point or 1/100th of a percent that American pension funds put money into gold from stocks or something else equates to a 1.4% move in gold. So, keeping that in mind, I think the price of gold, following their logic, would have to go to, if we were to go 6% to 7%, we have 6% of our money in gold right now at the pension fund level. If we were to go up by 1 percentage point, which is incredibly small, but if we were to do that in an orderly fashion, that's a $10,000 price for gold right now. They actually have a higher price, but I'm not going to say that. So I think when all is said and done, they won't announce the reset. They'll just price it out of everyone's hands. And that's the idea. If gold keeps going up in price, then we won't be able to buy it. And we'll just have to buy silver, which is also good.
What about the idea of revaluing the gold that the U.S. currently has?
I think that's going to happen. I think that has to happen. What they're going to do with it when they revalue it, I don't know. But, going back to
marking it to market or marking it above market?
Yeah, I think it would be. I think it would be insane to market above market. Could they do that? Yeah, I don't think they would do that. I think it's irresponsible to do that. But it's not to say there isn't some grand plan that you could price it above, have the gold market go to that price, and then say, all right, that's the price of gold. That's what we're marking it to, and everyone sells it, and then the U.S. buys it. Like there's a theory out there that's been around for years that there will be a 2-level reset. The U.S. will raise the price of gold domestically, and everyone will sell their gold to the U.S., and then the actual reset happens. A little bit paranoid, but you know what? It's not crazy. I've heard this from some serious analysts about that. But I mean, out of the rabbit hole, just to stay with the focus of your question, I think they price it. I think the U.S. needs to raise the price of gold on its balance sheet to a level closer to where it's trading. Mm-hmm. Let's put it to where it's trading, and after they do that, then they're going to take those funds and they're going to use it to weaken the dollar while retiring debt, which means they'll buy currencies from other countries. So in the long run, what are we doing? We're going to raise the price of gold, increase that money on our balance sheet, and spend that money on trade partners' currencies. So it'll be kind of like you buy our goods and we'll strengthen your currency against us, that type of thing. It's a manufacturing versus monetary privilege sort of thing. But I think if the U.S. were to raise the price of gold to say $4,000, and the gold is stabilized in that area, then gold goes to $6,000 almost overnight. Because once you raise it to $4,000, Europe's going to raise it to $4,000, and when you mark it on your books at that price, mm-hmm. you no longer have to sell it to get your money, and so I'm going to buy more. I'm not going to sell my silver if I'm an Indian in China. If I'm an Indian who can use it as collateral now. Now I can mark it at its full price. And that's a big deal. No one's going to sell their gold at the institutional level once that happens. So I think there's nothing but floor underneath gold going forward if we revalue it.
And I just want to clarify for our viewers what we mean by revalue the gold. The gold that the U.S. has, which is 261 million ounces, has not been revalued since 1973. So currently it's on the books at $42.22 per ounce. So it still is marked at that value, just to clarify what we mean by revalue the gold here. So Vince, what is the biggest, most important signal that you're watching right now? If there was one signal to understand where the world is heading, what would that be for you?
Gold
is it gold? Is it silver? What is it? Both?
No, gold is involved in so many things right now. I mean, if you're talking about gold, you're talking about macroeconomics, you're talking about geopolitics, you're talking about potential war, you're talking about debt, you're talking about inflation, you're talking about everything. gold is money again. I mean, it's always been money for some people, but now it's being globally recognized. But I think the thing that I'm focused on now actually came up today, and I think it's got long-term implications, and it's just starting. And that thing is the news that you discussed, you brought up earlier about Russia suing Euroclear. And that's why gold popped $50 today. I mean, straight up, that's what happened. See, we all know about the confiscation of Russian assets. Well, the confiscation of Russian assets were done through the European plumbing system, which is called Euroclear. And Russia hadn't done anything about it except buy gold. But just yesterday, Europe's leaders said, we're going to start giving some of that money to Ukraine in a loan that doesn't have to be paid back unless they get war reparations. And we're going to let Ukraine rebuild its nation with it. And Russia almost, you could tell they had it ready. Russia immediately filed suit in their own court, which will be recognized internationally. They are suing Europe for illegally taking the funds. Now, people who don't know the law, will roll their eyes, and I would roll my eyes. But the truth of the matter is, Euroclear, which is the European plumbing, is not above the law. It's governed by European law. And you've got nations in Europe that are not anti-Putin. The reason I think this is extremely important, right now that I've given you all the nonsense, is because Russia is saying to everyone who uses Euroclear that you cannot trust them to not take your money. Russia, right. It's supposed to be voted on every 6 months, and they're not. Europe has stopped voting on it. They're just saying we're taking it, we're keeping it, we're not giving it back. And that's a big deal. And all that does is it makes me and you as a nation say, well, I don't want my money in Euroclear. Maybe I don't want it in SWIFT either. Maybe I want it in my own central bank only. And so that makes nations take their kickballs and go home. And the kickballs happen to be gold, and they want their collateral back. I think this is going to be a big geopolitical problem. Here's the risk of this. Here's your kinetic war risk. This is happening at the same time Ukraine is becoming more and more disheveled. One of Zelensky's generals or leaders is gone, and he's a very powerful person, and he legitimized the government. I think Ukraine is going to spiral into a problem, and that problem is going to either be a soft coup or a hard coup. But when you do that, I think Europe is fragmenting with the actions of Italy, with the actions of Russia, and with the actions of Euroclear just unilaterally taking the money. I think there's more fragmentation. It just makes me want to buy more gold. Let's put it that way.
Again, an excellent point, Vince. It comes down to this issue of trust. Just to elaborate for our viewers, Euroclear is the Belgian securities depository holding about $190 billion of Russian state assets that have been frozen since the invasion of Ukraine. And as you say there, they just changed the rules. They're firstly, confiscating it in the first place is one issue. Right. Then they had this, they're owned by their own system. Oh, we have to vote on this every 6 months. And now they're like, oh, no, we don't even have to do that anymore. Right. So they're changing the rules that they've set, that they're playing by. And as you quite rightly point out, if you're another country looking at this, you're going, well, do I really want to have my assets there as well? And it brings it back to the asset that has no counterparty risk, provided you own it yourself, and that's gold. It all sort of circles back to that idea, right?
It's about trust. If there's no trust, then there has to be something that doesn't need trust, and that's gold in your hand. And that's what we're talking about.
And you mentioned this kinetic war. This comes at a very curious time as this development is happening. And of course, we've seen the Trump administration, despite many attempts, fail to broker a peace deal between Russia and Ukraine. And I believe we have the soundbite we heard from the NATO chief, Makori, urging member countries to do more to prepare for the possibility of a large-scale war, warning that Russia could be ready to attack the alliance within 5 years. And if we have that soundbite, let's play that.
Conflict is at our door. Russia has brought war back to Europe. And we must be prepared for the scale of war our grandparents, and great-grandparents endured. Imagine it, a conflict reaching every home.
I mean, some chilling words there, Vince, as these pieces sort of move on the chessboard.
Yeah, I think that's interesting. I hadn't seen that clip. I saw another one that was more fun to watch, but that was actually more substantive. It seems that things are moving faster now, and I don't know to what end, but Europe was already being more self-protective, more trying to be more self-reliant. They've increased their budget to rebuild their military. They're trying to be less dependent on NATO as an organization, and that's because President Trump said, "Well, we're not going to fund NATO for free anymore." And every nation, just like every money, is fragmenting. Europe is a supranational entity, but it's really just a bunch of nations that decided to work together, just like BRICS are doing now.
Mm-hmm.
And that trust is waning. And so I think what we just watched there was an attempt to marshal the forces of nations to not split up. Don't divide. We have to be together. I've been seeing a lot of, it's almost propaganda level where Europe is saying we're better off without the U.S. It's very Orwellian what I'm seeing now.
Mm-hmm.
And I think there are parties in this whole situation in Europe that really, I mean, a lot of this comes back to the UK. And I don't feel strongly about this, but people that I respect do. And that is Great Britain suffers the most with the divorce of the dollar SWIFT system because they have the euro dollar system. And if euro dollars don't do well, that's going to hurt the banking industry in Europe in general. And if that fragments, Europe fragments. And you're already seeing it. Italy's we want our gold back, right? Hungary is accumulating more gold, even though they're not technically part of the euro. I think you're looking at a system that's fragmenting. Trump is rumored to be, and it makes sense, Trump is rumored to be trying to peel Italy, Hungary, and Slovakia out of Europe. And so in doing that, the euro would fragment. And it's not really a strong currency to begin with. So I think when you take a complex structure like Europe and you start to break it into its component parts, somebody gets left without a chair in its musical chairs, and that's where the war starts. And I think there's a lot of research on the collapse of complexity, and when complexity collapses, you end up with wars, hopefully just regional. And I think even though he sounds like he's panicking, he's not wrong. It's almost like it'll be self-fulfilling the way they're acting.
So, Vince, as we start to wrap up here, you've been studying markets, monetary systems, monetary history for decades. With everything shifting the way it is right now, what is the one insight you would want people to walk away with? The one thing that really matters in understanding where we are headed to?
Oh, boy, you put me on the spot. That's a good question. One thing. Well, at the individual level, you need to be more of a sovereign individual. I'm a small L libertarian, but you need to be more of a sovereign individual. You need to prepare yourself for what's coming. If you're looking to try and figure out what's going to happen down the road, your best analogy would be we're entering Cold War 2.0. And the Cold War 2.0 is the best analogy. The worst analogy is the Cold War becomes a hot war. So we're entering into a divided world. On one side of the world, they're going to create their own currencies. And on our side of the world, we're going to try and keep people together. I think you're looking at a great leveling out of the economies from the East and West. And we are in a Cold War. And if you're in a Cold War, you need to have some things out of the system. That's what I mean. That's the takeaway is all this stuff that's going on with gold is and sovereign. These are not things that you, what's the expression? You can't unsee that. You can't take that back. The trust is not going to occur for a generation. So we've got 20 years of this, I think, coming right now.
And you have to bring it back to assets that, again, have no counterparty risk, that eliminate the idea of needing to trust somebody else. Vince, final thoughts, and where can people find out more about you?
Final thoughts. Final thoughts. I would just say, you want to be aware that the financialization of the West doesn't matter anymore. If they want the gold, then they'll get the gold, and the gold will be used to grow economies. You need to have your own. I don't have anything very insightful to say. I think we've aired that all out. People can find me at VBL GoldFix. So it's Victor Boy Larry GoldFix on Substack. We are the 37th highest financial newsletter in the Substack world. And if you're interested in a little bit more off-color or off-putting conversation, you can find me on Twitter or X at VBL's Ghost. So thank you.
And why the ghost?
Oh, because that's my second account. My first account was VBL, and I got banned for making a joke that there's going to be an assassination of a Japanese minister. The FBI actually came to my door. This was during the COVID era when they were just silencing everyone. And so the next account was VBL's Ghost. So I'm a ghost of myself when it comes to that.
The FBI came to your door over that post?
They did, yeah. Well, the post I put out was extremely dry, and it was in all caps. I know you're familiar with the culture. In all caps are what newswires put out. And I put out something like dismemberment of a Japanese dictator or something like that. And I'm not making this up. They showed up to my door and they said, would you mind? They weren't mean. They said, would you mind taking that down? I'm like, no, but why would you like me to do that? And the answer was, well, what you said is a joke, and I know it's a joke, and he knows it's a joke. There was a local cop and the FBI agent. But it's kind of like you shouted fire in a theater. You can't do that anymore. So I went on and I took it off right in front of them, and it never bothered me again. But that's what happened. And the account got frozen a month later. So
correct me if I'm wrong, though. Shinzo Abe was assassinated, right?
Right. I said it after
Japanese
Shinzo Abe.
Prime Minister.
That's what happened. I said it after Shinzo Abe was assassinated, and that's why they knocked on my door. He was assassinated, and a Japanese leader, I forget who it was going to be visiting Saudi Arabia. And I said, well, he'll be mailed back in pieces or something like that.
And wait, was this an off-color joke, or was this something that you thought was going to happen?
One was the off-color joke, which was to let people know that I was joking. The other was a serious, complete parody. And I didn't say it was a parody. And even though I'm not that influential, apparently the U.S. FBI was on their guard after Shinzo Abe was killed. And so they had to check me out. It was kind of funny.
And what prompted you to weigh in on a potential Japanese assassination?
We were, it was just the joke was, in the past there have been, comments about Saudi Arabians, the Saudis dispatching of a journalist by hacking him to pieces. We don't know if it's true or not, but
right, we don't know if that's
documented. I don't want to be gross about it, and so I made a joke along those lines. And then I wrote the serious sounding thing. I forget what I wrote. I probably blacked out because I was so scared when the FBI showed up. But I did it because we were all joking about it. It's like, oh, who are they going to kill in Japan next? It was just complete dark traitor humor. Who's going to be killed next? Well, who's going to Saudi Arabia? Oh, that guy. Oh, he's next. So, it just
okay.
That was the context of it. Yeah.
I see the connection, and now we know why it's VBL's Ghost. Well, thank you to you and your ghost for sharing your insights with us today. We really do appreciate it, and we look forward to having you back on again soon. Thank you, Vince.
Thank you for having me, Michelle. It's great.
And thank you so much for watching. I really do appreciate you spending your time with us. If you enjoyed this conversation, make sure to subscribe. Also hit that notification button, leave a comment. Let me know what you want me to cover next time. As I like to say, feel free to praise, whine, or just opine. And if you would like to learn more about building a precious metal strategy, you can reach out to info@milesfranklin.com. There's a team of specialized advisors and brokers that can guide you through the process. And if you mention my name, they'll give you an extra special deal. Also, check out our website, milesfranklin.com. Thank you again for being here. We'll see you next time on The Real Story. Until then, stay sovereign.